G'day, Kate. Thanks for the comment. Now, I wanted to explain the difference between cash flow management and reporting and accounting and bookkeeping, and how both of those things are mutually exclusive from each other and basically coexist independently. So we've got to understand that cash flow management happens based on the cash that is actually flowing through your bank accounts. It is not designed to replace good bookkeeping and accounting. And I agree with you wholeheartedly that no business owner should be doing their own bookkeeping and their own accounting, because one, they don't understand how to do it properly, and two, it is not highest and best use of their time. They are better off outsourcing those functions to professionals and making sure that they focus their time and attention on growing and scaling their business and understanding what those numbers are telling them so they can make better business decisions informed by those numbers. However, accounting and bookkeeping alone is a lag indicator. It is happening after the fact, after the transactions have occurred. And for the vast majority of business owners that I have engaged with, most of them are only doing their bookkeeping at a minimum monthly. Many of them are doing it quarterly, aligned with their quarterly compliance, and their accounting, in terms of their financial statements and tax returns, are typically done in many cases 9 to 12 months after the financial year is finished. Now, this is not a great way for you to manage your finances, because the activity that you are doing does not align with the reflection on the outcomes that you have realized as a result of that activity. So this is where good cash flow management principles come into play. When you have a series of bank accounts that have been segmented for the purposes of isolating certain spending behavior, so we've got an income account that the income comes into, we don't spend from that account. We separate our GST and our sales tax and our cost of goods to ensure that we cover our variable expenses. From that, we put money aside for operating expenses, for owner's pay, for tax, so your PAYG, super, and corporate tax, and then your profit. We can look at a bank account every single day and be able to accurately see exactly how that business is performing, and secondly, have confidence around financial decision making, knowing that there's money there in order to fund a particular expense. Now, we do this with our clients, and on average, they increase their profitability by 15 to 20% as a result of implementing this cash flow system. Because what it creates is it creates transparency. That transparency follows very closely to the activity, because most of them are looking at their bank account daily or weekly. And secondly, it creates accountability, because transparency allows them to track and have the clarity around what's actually going on, and that informs and shifts their decision making and their behavior as a result of that transparency. And doing this just with bookkeeping and accounting does not work, because if you speak to any business owner, ask them how often they're proactively going into their Xero or MYOB or QuickBooks and going and having a look at their management reports. Do they even understand what their P&L, their balance sheet, and their cash flow statement means? And the amount of terminology that exists, like even if we simplify it into revenue, cost of sales, operating expenses, operating profit, EBITDA, net profit after tax. Then we go to the balance sheet. We've got cash, we've got current assets, non-current assets, current liabilities, non-current liabilities, equity. And then we've got our cash flow statement of understanding our operating cash flow, and non-operating cash flow, and our inflows and outflows. There are far more things that a business owner must understand to navigate those financial statements compared to just looking at a bank balance. So once again, this just goes to show that cash flow management is a completely separate function from bookkeeping and accounting, and it is not supposed to replace that function. They can both work symbiotically together. It is not choosing one over the other. It's doing both incredibly well. So I appreciate the comment and hope this gives you guys some insights.